Problem with Bitcoiners, unfortunately, they've been beaten down over the last 4 or 5 years. And so the expectations were very high that the Trump administration would just come in.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Anthony Scaramucci dives into the world of Bitcoin, emphasizing its immense value as a long-term strategic asset. Join us as we explore his bold insights and discover even more together.
Joining us right now, talk crypto and so much more, Anthony Scaramucci, founder and managing partner of Skybridge Capital. It's great to see you, Anthony. We're looking at Bitcoin sitting just about $82,000 right about now. It's obviously come down a bit. In the background, we've got this Bitcoin reserve, though, and I think a lot of the move prior to that had been on speculation that would come about. Now there's all sorts of debate about how it's really going to work and whether the government and taxpayers are going to ultimately be buying Bitcoin. What do you think?
Well, good morning, Andrew. I love the strategy. I want to applaud David Sachs for the job that he's done in terms of organizing the administration, going to the Congress and talking to the Congress about the ideas around Bitcoin and stablecoin legislation. And I think if you read through the executive order, there's a lot of meat in there for Bitcoiners. The problem with Bitcoiners, unfortunately, they've been beaten down over the last 4 or 5 years. And so the expectations were very high that the Trump administration would just come in, turn on a switch, and they would have this halcyon era. I think what David Sachs has done, frankly, is brilliant because he's trying to create a bipartisan commitment and a bipartisan understanding to digital assets and the space of digital assets in the United States. So the trading is sloppy right now, but I think if you look forward over the next 3 to 6 months, you'll see a lot more institutional buying. And the fact that the United States is going to hold this asset means that other countries, Andrew, are going to end up buying this asset as well.
So how much of it, though, depends on the U.S. government and taxpayers buying Bitcoin? Or do you think just the idea that this reserve, which is coming from basically stolen or illicit Bitcoin, which I also don't think is a great advertisement for Bitcoin, how does that reserve therefore grow if there is an additional money put in?
Oh, okay, but there's been forfeitures of U.S. dollars. There's obviously frozen Russian assets. And so if you just equate Bitcoin to currency or dollars, then I think you can get over that assertion that it's quote unquote stolen. It's just a forfeited asset. But I think what David is basically saying, or what the communique from the Trump administration is saying, that they're not going to spend taxpayer dollars on this, but they will find revenue neutral ways to acquire Bitcoin. That could be selling other assets, frankly, that have been under forfeiture to the United States and transitioning them into Bitcoin. So again, it's a step in the right direction, and I think it's very, very important. If you think about the assets that are in our strategic reserve, they're nonpartisan. I don't think there's a debate in the Congress about holding gold or holding oil or some of the rare earth minerals or even some of the medical supplies, frankly, that the U.S. holds in its strategic reserve. And I think we want to get Bitcoin to that position, Andrew, and it will take some time. And I applaud these guys for having patience. I think if they went very, very quickly and sort of rammed this into place, there would have been a reaction formation on the side of the Democrats.
Here's the part this is the part that I'm confused about Bitcoin as a strategic reserve in this country.
Investors are fleeing risk assets as growing recession fears take center stage. JP Morgan has recently raised its U.S. recession odds to 40%, sparking concern across Wall Street. This shift in sentiment has hit major indexes hard, with the S&P 500, NASDAQ, and Dow Jones all suffering significant losses this week. Crypto and tech stocks experienced large sell-offs on March 10, reflecting investors' unease about the economy's future. Economists at JP Morgan now warn that extreme policies may push the U.S. into a recession, while experts at Goldman Sachs have increased their 12-month recession probability to 20%. Morgan Stanley has also revised its economic outlook, lowering growth forecasts and raising inflation expectations. Even as key government advisors like Kevin Hassett share reasons for cautious optimism, the market remains jittery. The so-called Trump bump is a distant memory, with major indices showing declines that worry both retail and institutional investors. The tech giants have not been spared either, with top companies losing billions in market value in a single day. Meanwhile, crypto markets plunged to their lowest levels since early November, with Bitcoin itself dropping sharply before a minor recovery. As recession odds rise and uncertainty grows, investors are rethinking their positions and shifting away from high-risk assets. With economic indicators pointing to a more challenging road ahead, the market's volatility appears likely to continue, urging everyone to stay vigilant and cautious during these turbulent times. Investors and analysts are closely watching these trends, hoping for a turning point that restores market confidence.
And as we've discussed, look, people used to say if the U.S. government was buying Solyndra, that was a terrible idea, that they don't know how to operate or run the post office, or all the things that supposedly the government is completely incapable of doing. And so the idea that we are going to invest in and potentially lever ourselves up, meaning use taxpayer debt effectively to do this, I think for people on the truly conservative side, and you could say conservative politically or conservative economically, they say that they don't understand this.
Okay, well, I would encourage them to do a lot more work on it, because if you accept what Michael Saylor is saying, that this is an operating software layer for the future of transactions, and if you believe what I believe, that this is a digital store of value and it's equivalent to digital gold, and when you go into the future 10 or 15 years from now, I do think the United States is going to want to have this as a reserve asset in order to maintain the stability of the dollar and the supremacy of the dollar. And so I think concomitant to that is the stablecoin legislation to obviously empower the dollar further. But again, this is not a Solyndra. It's not a company.
Think if the government was...
No, I thought you were on my side on this one, Joe, right?
No, you're gonna hear me on your side. Think if the government was totally all in on 2 or 3%, like governments that are totally at risk of the devaluation. We see what the Fed is capable of and what we're capable of in terms of spending. You would almost think that there's more risk in being stuck in fixed income, long duration assets. You'd almost want Bitcoin to offset the risk, which is in those things, I think, wouldn't you?
Yeah, I think again, what Andrew's saying, I think, is more company and venture capital related. That's a question for another day related to a sovereign wealth fund and should the U.S. be in that business. But this is, again, if you think that this is a reserve asset and this is going to be digital gold, I think Joe believes that. I certainly believe that. And I've been a Bitcoin holder for just over 5 years. This is something I would want the country to own to defend itself and to defend the currency. And I think guys like David Sachs, of course, understand that. I think they've done a great job of convincing President Trump of that. And what I would suggest to Democrats is that they get on board. Just because the Trump administration, this is a big danger now in our society. If the Trump administration has good ideas, let's call balls and strikes and say that they're good ideas. I think these guys make a mistake. If the president was right on the border, you reverse everything on the border and you cause a disaster on the border. Let's not do that here. Let's make this bipartisan. Let's get people to understand this better, Andrew. There's a lot of skeptics, particularly people my age or older, that don't understand it. I was at a Yale event on Saturday, and a couple of people that are roughly in the same demographic group as me hate it, don't understand it, or negative on it, think it's worthless. But it's a very valuable long-term strategic asset, and I believe the U.S. should own it. And I think David Sachs and his team has come up with a way for us to own it in a way that's the least controversial way, which is not having it cost the taxpayers anything additional to own the asset.
Ethereum's price struggles to regain its former glory as it dropped below $2,600 on February 24, and many wonder what must happen for Ethereum to reclaim its bullish momentum. 4 essential elements will drive Ethereum's future. First, the network must undergo significant upgrades to boost performance and lower transaction fees. While the upcoming Pectra upgrade promises improvements, it remains unclear if it will deliver the necessary changes to enhance overall usability and investor confidence. Second, increased network usage is crucial. As more projects and users adopt Ethereum, the ecosystem will experience stronger demand and healthier on-chain activity. Third, a decline in supply is needed to support price recovery. Recent shifts have made Ethereum inflationary, and investors hope that measures such as burn mechanisms will eventually reduce the circulating supply, driving scarcity and value. Finally, improved interoperability among Layer 2 solutions is vital. Better integration across these platforms will unlock liquidity and ensure a smoother user experience, helping to solidify Ethereum's competitive advantage. Without these advances, traders remain cautious amid rising competition from networks like Solana and emerging alternatives that offer novel features. Each of these factors plays a part in ensuring that Ethereum remains a viable and attractive asset for both retail and institutional investors. The journey to reclaiming $2,600 will require coordinated improvements across the entire ecosystem, setting the stage for a potential market resurgence. These transformative changes will not only stabilize Ethereum's price, but also significantly rebuild confidence among users and investors, sparking renewed interest and market optimism. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.